The slowing sales and falling prices sent Tesla's earnings plunging in 2023. Tesla's revenue came at a record high of $96.7 billion in 2023, which marked an increase of 19% compared to 2022. Revenue grew much slower than Tesla's vehicle deliveries, largely because of the price cuts that we've talked before in our previous videos. But those price cuts had an even greater impact on the company's profitability. Taking in less revenue per EV sale led Tesla's gross profit margin declined to 18.2% in 2023 from 25.6% in 2022. So it fell from almost 26% to 18%. And as a result, its earnings per share fell 23% to $3.12. And this has serious implication for the valuation investors apply to Tesla stock. ARK's prediction for Tesla stock doesn't rest on EV sales alone. ARK believes Tesla stock could jump to $2,000 per share by 2027, not only because of its EV sales, but also because of its autonomous self-driving software. EV sales accounted for 85% of the company's total revenue, but ARK believes that will shrink to 47% by 2027, with 44% of its revenue coming from that new technology. Tesla's self-driving software remains in beta mode, but it completed more than 500 million miles of real-world testing with participating customers. It could eventually transform the company's economics in a number of ways. And first of all, Tesla will earn a subscription fee from each other who buys the self-driving software. And secondly, Elon Musk says Tesla might consider licensing it to other car makers. Software typically carries a high gross profit margin up to 80%, so those two revenue sources could send the company's earnings skywards once it achieves scale. And finally, Elon Musk wants to build a self-driving ride-hailing network so Tesla customers can monetize their cars when they are not using them. It would operate similarly to Uber, with Tesla earning a split of. And interestingly, ARK's forecast doesn't factor in a revenue contribution from Tesla's new humanoid robot. Optimus sales could begin in 2027, and Elon Musk intends to eventually ship millions of units at $20,000 each. So it could be an enormous opportunity. Optimus could replace many human jobs in industries like manufacturing to enable plants to operate around the clock. So the real question is, can Tesla stock nearly go up 10 times from here? Let's circle back to Tesla's $3.12 in earnings per share for a moment. And based on that figure, its current stock price, Tesla trades at a price to earnings ratio of 56.2. Therefore, despite the 57% plunge in its stock price in late 2021, Tesla is still nearly twice as expensive as its peers in the tech sector, represented by the Nasdaq 100 index, which trades at a PE ratio of 32.9. Cathie Wood's prediction that Tesla stock will jump to $2,000 by 2027 hinges on the company generating $1 trillion in annual revenue by then. In other words, the company's revenue will have to grow more than tenfold from here, or by 80% compounded annually. And remember, Elon Musk himself, who is a pretty optimistic person, is only targeting a 50% annual increase in EV deliveries going forward. And the company will likely fall significantly short of that in 2024. Even though self-driving software could eventually transform Tesla's economics for the better, it's still in beta mode with no firm release date. It's unlikely mainstream adoption will occur at scale by 2027. The probability that Tesla stock soars 1,140% to reach $2,000 by 2027 appear very low. However, it might still be a great long-term investment on the back of its autonomous driving software, its Optimus robot, and its affordable EV. Investors might do well to buy Tesla stock upon further updates on these fronts, perhaps near the end of this year or in 2025, depending upon the company's progress. The electric vehicle market is in the midst of a slump in 2024. Interest rates still remain pretty much elevated, and the Federal Reserve does not want to be hasty about cutting them either. Elevated rates for an elongated period not only risk slowing economic growth, but it can also disincentivize consumers from purchasing products or assets normally bought using debt, such as cars. And despite this, there are still very good reasons to invest in reasonably valued EV stocks, especially those who are poised to overtake Tesla, according to Market Insider. Market Insider thinks that these three companies may overtake Tesla, mainly because these companies are trading at a relatively cheap valuation multiple, and despite the broader slump, are continuing to invest in capturing the market share. And for some perspective, Tesla shares are down more than 28% on the year-to-date basis, and this will make it easier for these EV stocks below to beat Tesla this year, according to Market Insider. And the company which we're talking about today is BYD. BYD's growth in China and abroad appears unmatched at this point of time. And last year, BYD became the world's top EV maker in 2023, beating its American rival Tesla in electric vehicle sales. In Q4 of 2023, BYD sold 526,000 electric vehicles, while Tesla only sold 484,000. And despite an EV slowdown, BYD is still increasing its sales year over year. In particular, in Jan 2024, the company sold 200,000 electric vehicles, which is up 33% year over year, but down more than 34% monthly. And that is bound to happen between December and Jan. And the Chinese EV maker was not the only large electric vehicle company to report a month-over-month decline in sales growth. To cushion the slowdown in sales, BYD and its competitors have pursued price cuts in their expensive models. For example, the BYD's SUV has a price tag of $16,642, which is nearly 12% less than where it was before. And still, an argument can be made that BYD's growth cycle has not peaked yet. The company continues to make strides in expanding its brand power abroad with a new dealership partnership in Qatar and other partnerships in making across Europe. BYD, which is now larger than Tesla in EV sales, only trades at 15.7x forward earnings, which could present a great opportunity for interested investors. But still, as of right now, BYD's profitability is still a big question. So that's it guys from here today. Thank you so much for watching. Please hit the like button. I hope you all have a good day.